It's only entertainment.
Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. With me is Morgan Paxhia with Poseidon Asset Management. Morgan, thanks again for being on the Talking Hedge.
Thanks for having me.
For those who don't know, what is Poseidon Asset Management? What do you do?
So Poseidon has been around since 2013, formed by my sister and I, Emily, with the sole focus of investing in the cannabis industry. And so that's what we've been doing for the last however many years that is now. It feels like a lifetime, but so we've invested several private funds, and our ETF we launched just about 1 year ago.
All right. You've invested in some big names and some things that people may not have heard of. What is the process in which you decide on how or what to invest in? There's a lot out there.
There's a lot out there. We have a pretty good process at this point. Something we've refined quite a bit over the years. It always comes down to kind of the simple basics of team, assets, and strategy. We're talking about plant touching companies, the locations, what state or what municipalities they're in, because those are all determinants of, from our perspective, the exit value and how much return we want to generate. As venture capital investors, as a hedge fund, as an ETF, we're always thinking about the returns we can generate, and so we want to make sure we're maximizing the probabilities of driving those returns.
What's more important, cash flow or management?
Well, right now, it feels like cash flow has been a major focus, and that's really just given the macro backdrop. We're in a very tight capital market period. We've been in one in cannabis for a lot longer than the rest of the world. I feel like they're just starting to realize what tight capital means. So cash flow is, from our perspective right now, it's like a bridge to a better time, because we are a growth industry, and generating cash flow is largely at the expense of growth. And so management teams that are good capital allocators shouldn't be too wary of just only being focused on cash flow if they have the means of attracting more capital in a way that is accretive to the business. I really do think that we are in this period. It could be quite a bit longer depending on the macro backdrop, but we should also not be afraid of raising new rounds of capital and getting back to growth.
Do you and your sister ever argue about what to invest in? Do you have like a favorite? She's like, I hate it.
Emily and I have been doing this a long time together, and we've been through a lot of different companies and a lot of different situations. So our discussions are always very robust. I love the conversations that we get to have. But now we have a whole team, so it's not just Emily and I with us. We have Patrick and Colin, and Andreas and Tyler. So the discussions are much bigger now. But Emily and I have always had a very good working relationship without spirited discussions if we're not always aligned, and it comes from a lot of respect.
Do you have a particular favorite? I'm super grateful that you invested in Headset. I love the data and looking at that and then being able to infer on a local level what that data is really like representing. So I'm a big fan. Do you have a particular favorite either industry and or company that you like and hope that there's more coming?
You're asking us to pick a favorite. We invest in so many different areas. Right? So we do plant touching companies, we do ancillary technology companies, we even do hemp. And so I can kind of pick some favorites from all of those. But our newest, one of our newest investments that I'm very excited about, although that is maybe yet to prove if it's a favorite. We'll see what the exit is. But is a company called Sunburn out of Florida, Brady Cobb and team. Basically, we're able to get some of the vendor assets and are now under their stewardship. They've proven to be very good capital allocators, good operators, and in a market that we like. So very excited about that one. Technology side, like I said, Headset's been a piece for a long time. I'm very excited about the trajectory of that business. And then on the hemp side would be Baskol, industrial hemp processing, and they're getting deeper into that space, and that's just really exciting. It's such a great complement to what we do in cannabis, and it couldn't be more different.
You mentioned MedMen. Are there other distressed assets out there that you foresee being an opportunity?
There's a lot of distress right now. We are just kind of going through this period, this cycle, where we're going to see a lot more distress, unfortunately. I think we might see a peak of it. My estimate is 2Q of next year. Capital markets, capital flows have been so tight for so long that a lot of companies just couldn't get to a point where they were stable, that they can continue to operate. And they can't get more capital, right? And so a lot of these businesses that are distressed are running up tax debt or just other secured debt, much more than the enterprise value of the business. So there's a lot of distress out there, but there's few that are good opportunities. I would say I wouldn't even go with like the principle of 80-20. I would say it's more like 90-10, where 90% of it is just not really going to be worth it. And I think you get a good sense of this when we're talking about on the operator side from the large MSOs, the multi-state operators. You don't see them being very aggressive in consolidating these assets. Right? They're just being very judicious and taking their time. So if I saw a much more robust activity, that would tell me that there's a much greater opportunity set in acquiring distressed.
What creates a distressed asset? Is it from the very onset of improper valuations? Because you would think if they were distressed, they could just issue more equity or debt and then just keep going. But at some point in time, an investor is going to be like, nah, I don't want that. And I'm thinking that's a part of bad management, bad operations, distress, whatever. Is there a way that they could have prevented that or pushed it out a little bit? Does it start with bad, improper valuations? Do you have an opinion?
Yeah, valuations are always a component. But it's the team, it's the capital allocation decisions. How much capital did they raise and deploy that? Was it accretive, or did they burn a bunch of cash and not create any value? Right, and so we can get into distress situations. There can even be good businesses, but they have a cash issue. So there could be, it could be a totally fine business, but just no cash. And that is an attractive distress situation because then their balance sheet's not all blown up by tax debt and other kinds of debt, and where there's just no equity value. And that's really hard for an acquirer, especially in this environment, because that's cash. You need a lot of cash to deal with all of it. And most of the transactions we have, we're just not seeing a lot of cash because there's just not much out there. So a more interesting situation is a company that's had a good trajectory, just couldn't break through, and so they're just distressed from a cash perspective. And those are the ones that we see have a much higher probability of being acquired because they probably are exhibiting a good team, good allocation of capital, generating value. Just there's in investing there is this unfortunate timing function, and if you're just the cycle just didn't go in your favor, but you did a lot of other things right, the market does recognize it.
What about areas where they're not able to generate revenue? Is there still opportunities to issue a pitch deck and say, yeah, this is my idea, I want some money? Is that time come and gone, or is Missouri and Maryland?
Yep.
Are those opportunities still okay because they haven't had a chance? So two-part question. Can emerging markets get money without operating, and would you ever consider it?
Yes, and yes. We actually just did a deal in Alabama on a pre-licensed application. So no revenue, no license, nothing, right? It's a team, it's a business plan. And from our perspective, these new markets, if you can win licenses, it can be very interesting. So like in Maryland and Missouri, those are the two states that did win in this election cycle, which congratulations to them. We'll certainly look at opportunities there. Generally not interested in cultivation. If it's standalone cultivation, we don't see any capital flowing there. It's just, I think the industry has really learned that we have to be much more thoughtful about the true supply side of the equation and looking at how much capacity is getting built into these states. The lion's share is going to be driven by the largest operators. So that leaves a little bit of market share for some smaller operators, which is great, but that's a hard venture kind of calculus. Where it could be more interesting is if you're on the retail side and you're getting a Class A kind of locations, because we have confidence that those will be very attractive acquisitions. So if you have a good team that's got good locations, that's a good potential investment opportunity.
retail seems to make the most money. Do you lump the manufacturers in with the growers? The people that are making edibles and stuff, that really the only differentiation is a brand, which takes a lot of advertising. Do you kind of lump those manufacturers in with growers?
We do, yeah. So there's kind of two ways to think about it. It's vertically integrated, where you're just doing everything. And that's how we're approaching it. Hopefully in Alabama should we win. The company that is applying should they win. Or there's more just focused on retail. And if you listen to all the third quarter earnings calls, everything that's been discussed has been verticality, right? That's like a new phrase. I think Anthony Georgiadis from GTI coined that phrase, or really made it, drove that point home in the second quarter, and you saw it in a lot of the results in the third quarter, and it even hurt some of those that had a heavy dependence on wholesale. Like if you think about like a Cresco or a Forefront, I guess somebody argued Forefront didn't think, but Cresco did note the headwinds from the verticality kind of issue, where it made it even more challenging from a shelf perspective. And where we are in the cannabis industry's life cycle, we still think about so much of the investment today is infrastructure. So talking about laying the foundation for when brands can really emerge. But right now, it's so much of our industry's growth is driven by access. People getting the ability to buy legally for the first time, right? Even though the consumer, on a more broad perspective, has been under pressure from inflationary, there's other kind of impacts, there still are just day one customers every day in U.S. cannabis. And so that gives us this kind of counter trend of what may be going on from a recessionary perspective, is cannabis is still a growth story. And so again, that's why we like the retail perspective. Eventually brands will become much more prevalent, but every time we've seen a brand come, it comes in hot, and then it tends to fade away pretty quickly. There's maybe just a couple that you can think of that are starting to earn that kind of stand.
What was it about the Alabama company that made you invest in them particularly?
People we've known for a long time. We've worked with them on another deal, actually, with our Vascor investment. We've known them for years. So we've worked together, we've sat on the board together. So we just have a lot of confidence in their understanding of the marketplace, understanding of Alabama, and the process to go through and apply there. So it was just a combination of things that happened to work out very well. It's going to be a hell of a competitive process, though. So, we'll see. We know there's a lot of interest from big operators and groups that want to get in there. But the interesting about the Southeast is there does seem to be a bit of a tilt towards more localism, right? Where they want to support local families and people that have been building businesses in those local states for generations, right? And that was actually part of the application process, which we thought was a unique aspect for this team to stand out, is they are deeply ingrained in it.
Okay. I want to briefly ask you about your ETF, because I'm curious, with it being publicly traded, if it's still getting lumped into all of the other cannabis companies, which are depressed on price and volume and demand and everything else for a number of reasons. Institutional investors aren't really in it yet. Are you still seeing that where there's a quote unquote value to the stock price?
Oh, absolutely. It's actually really funny. I was just this morning. I was looking on my phone on my JP Morgan Chase and pulled it up, and the Morningstar style boxes. PSDN is actually considered a deep small cap value, which I was kind of laughing about. I just like to think we're deep value investors being in a growth industry. Right. It actually is quite a compelling investment thesis. But the capital flows have been low. Generally, MSOS advisor shares, Dan and Noah, they've done a phenomenal job. The thing is a beast. And our focus is really just trying to reach out to investors that are not already in cannabis, right? And trying to educate them about the opportunity set and how we stand out, where we think we add value with our strategy. And I really do love our strategy. I think it's very unique. We're very focused right now, to your question before about cash flow, like we're very balance sheet focused. So if we look at our holdings, very targeted there, and where we get to be expressing a little more bullish or not kind of sentiment is with our leverage. And we've done exactly that. As a great example, we ended the third quarter at about 110% leverage. And as we're getting closer to this election cycle, we've been ramping up leverage to today we're at about 128%.
Yeah.
So it's kind of in our sweet spot of where we like to be, and the fund has done very well from in the fourth quarter so far as a result. And so we think as people get more familiar with how we are operating the strategy, our selection, our weightings, and our leverage, we do think it's a very compelling strategy.
I could talk to you for another hour, but we don't have the time. Is there anything else you want to cover that we haven't talked about?
Well, we're here in Vegas. This is a big week, so our calendars are jammed with meetings. I'm very excited to be sitting down with a lot of people. This is a great opportunity. I mean, this is our big year, or our big event of the year every year, right? Doing this 9 years, I think we've been coming to Vegas doing this. So very excited to just get to be face to face with people. Travel is still kind of weird and challenging, so this is just a great time. There's a lot of people here, so I'm really excited.
I got here yesterday on a Monday, and it felt like Friday. So I was really surprised about how many people are here and how many more people are traveling. So I was shocked. I had to remind myself it's only Monday yesterday. Yeah, so that was pretty interesting.
It was packed again today too. It's SFO.
Yeah. Jammed. What's one of your goals? What's one of your takeaways? Something that you hope to get out of MJ BizCon?
The goal, well, I mean, as many meetings as possible, have a good time. Hopefully we'll get some interesting federal news, and so it'll make the parties that much more fun.
All right. Where can people get more information on Poseidon Asset Management as well as your ETF?
Poseidon.partners is our website. We're on Twitter. Poseidon Invest, I think, is our company handle, and then I'm on Twitter as @Morgan Paxhia or Hedge Dude, which is just for fun. We're also on LinkedIn, and then for more specifics about the ETF, psdn.advisorshares.com is a great place to go to see like all of our holdings and our weekly leverage where we post it.
Perfect. I think with that, we're going to have to roll this one up. So I want to thank my guest, Morgan Paxhia of Poseidon. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.